Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh, Ba'ashem Yahweh Shai, Ba'ashem Kakadash. Double honors to the elders and apostles of Great Millstone, preaching his word truthfully and sincerely. Shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely. And shalom to the Akim, that be like unto the speckled bird, preaching the word truthfully and sincerely. Say shalom to you Akim out there. And this is a sit-down lesson for In the News, December 6, 2022, on this Tuesday night at 6:35 p.m. Central Standard Time. And a news article from Barron's.com, December the 6th, 2022 at 6:27 p.m. Eastern Standard Time. And the highlight of this news article, and it reads from Barron's.com for December 6, 2022. For In the News of December 6, 2022, and it reads, Stock Markets News. It says, what's happening today? And this is a statistic of the stocks for the Dow Jones Industrial, S&P 500, and the NASDAQ has a two-day losing streak. As you see the statistics of all three categories, as the stocks have crashed once again on a two-day losing streak. It says stocks dropped Tuesday, extending their losses as investors remain nervous that signs of strength in the U.S. economy will lead to the Federal Reserve to keep raising interest rates at a painful pace, right? Because with the inflations continue to increase, the consumer spending as well too. Even though you have a good solid gain of the economy, even though the jobs created 233,000 jobs were created. I believe the report came out either Friday or Monday, I believe. And the unemployment rate is 3.7 from 3.5, I believe. But you're still going to have the Federal Reserves, they're going to continue to raise the interest rates. And, yeah. It says, here's what we know today. The Dow Jones fell negative 350 points on fears of a recession. It says the oil prices stayed lower after a big drop of fear of a federal tax hike fears. It says Markets Tumble of Recession Fears by Jason Somshin and Jack Denton. It says the strong economic data has investors concerned the Federal Reserve may not slow its pace on interest rate hikes. It says the stock market dropped Tuesday, extending its week as Wall Street remains worried about a recession. Right, that as well too. A still continuing fears of interest rate increasing along with the inflation and fears of a recession as well too. It says the Dow Jones Industrial Average dropped negative 351 or 1%. The S&P 500 fell also 1.4%, and the NASDAQ Composite declined 2%. Salakia. The latest fears stems from remarks by JPM CEO Jamie Dimon, who said in an interview of CNBC that while consumers and companies are in good financial condition, that could change soon, which could cause more than mild recessions. This is particularly because interest rates have soared this year, which it have been here, and the market is continuing to worry about the damage, right, with the inflation as well too. and a continuing federal tax hike of a potential fear of a recession. It says all three major U.S. index fell more than 1% following Friday's employment report, which both jobs and wage growth beat expectations. Investors are worried about stronger than expected labor markets will compel to federal to lift rates many times into 2023. I believe I did a report on that as well too. It was saying about they was worried about the inflation, the interest rates gonna increase all the way into 2023, which is next month as entering a new year. To a higher level than current expected. Higher rates are meant to squish high inflations by reducing economic demand. The federal chairman, Jerome Powell, did say last week that the federal is likely to slow down the pace of the interest rate hike at the December meeting because the rate of inflation is declining. The Fed doesn't want to cause too much economic damage. Still, the central banks could implement slower but more rate hikes. It says the labor market strength is the biggest hurdle to a Fed pause on a pivot because employment is a barrier to lower inflation, wrote Ryan Bellinger, founder and managing principal of Clare Advisors. The market recent weakness suggests investors are repricing November optimistic, which was fueled by hopes that the Fed would be willing to pause its pace of rate hikes, which is not going to happen. It says consistent with that, short-term bond yields are beginning to inch higher. The two-year Treasury yield in the barometer for expectations about the ultra short-term federal funds rate is up to 4.358% from just below 4.2% early Friday morning before the jobs report. It is still below the multi-year high, or just over 4.7%. Other bond market signals and worrisome for the economy and stock market. The 2-year yield remains far below the 10-year yield, creating a yield curve inversions. If short-term yields are higher than long-term yields, it means higher rates today could cause enough damage to the economy growth and inflation tomorrow could bring the 10-year yield down. It's a sign of economic and policy uncertainty and often signals that a recession is on the way. Indeed, the stock market is still a fairly uncertain state, right? Because the stocks, it reacts to what's going on economically or any major announcements or globally. And that's what the stocks react to, mostly financially. If it goes to a negative gain or a positive gain. It says, indeed, the stock market is still a fairly uncertain state. The S&P 500 has moved 1% up or down in 21 days this quarter, higher than the average number of 1% moves in a quarter, according to the data track. The signifies that market participants remain wary about federal policies, the Russia-Ukraine war, and China's Word 19 policy. Either way, the market has had trouble mounting sustaining rallies in the past few trading days. All three major U.S. index are up. Their lowest close of the year hits its fall. Mostly hope that the Fed has already done most of its rate hiking since rally from its 3,577 October bottoms. The S&P 500 has been unable to close above the 4,080 level. That isn't surprising since the index is close to hitting resistance, a level that has been sellers coming into the knock the index lower early this year. From very short term perspective, we think the 4,150 is the absolute upside this rally can archive, wrote Mike Wilson, chief of U.S. equity strategist at Morgan Stanley. For the index to rally past that point, more factors have to change for the better. The markets needs to see the inflation continues to decline, slowly declining, not rapidly fast declining. It says economic expected the November consumer price index have gained 7.3% over year from 7.7% in October, and that the Feds could cause its rate hikes in 2023. It needs to see it in coming quarters that the impending economic damage for higher rates won't dent corporations earning too much. It also needs to see that the Chinese government is moving away from its zero you-know-what policy, which have including lockdowns, which I believe recently they had lifted some of the restrictions because they had a protest over there not too long ago. The rally is guilty until proven innocent, wrote Brian Overby, senior market strategist at Ally. For the rest of this year, the December Fed meeting next week holds the key. And these is the some markets have crashed. The composite negative 225.05 was dropped 2%, and the XPX one negative 144%, and the DJIA negative 350 to 1.3%. So yeah, even if they had a good the job reports, that the economic data reports and the employment data reports created about 233,000 jobs, along with the unemployment rate dropped to 3.7. But they still have a potential fear of an increase of a mild recession to a increasing recession. Because the Federal Reserves, I believe I was reading all the way down on the article, they're going to have another meeting, which is next week. So we're going to see how that plays out. If they're going to continue to increase the interest rates, because they've seen somewhat a decrease of the inflation, but there's warning signs that the inflation is going to increase all the way into 2023. And that kind of fear of a potential market crash at the beginning of January 1st, 2023, and all the way into the new quarter of the markets of next year for 2023. They fear of a continual increase of inflation, consumer spending, gas prices, potentially what goes on around globally as well too. So you're seeing more clear signs of modern day Babylon is falling, which you can read that Revelations 18:2, I believe, as a reference scripture. I roughly paraphrase. So you're still gonna see this trend continuing with the inflation rates gonna increase. It's gonna soar along with the gas prices, along with the consumer spending as well too. Even if they do have a good solid job report, a good solid economic report, but according to economic experts, they still see recession, a economic recession still coming as well too. You know, along with the market's going to continue to crash. So as you see, the markets crash for a second time this week on a 2-day losing streak. So we're going to we're going to continue to see if it's going to continue to crash. So as of right now, these past 2 days, you've been seeing the economic crash. And this is data statistics of the Dow Jones Industrial, S&P 500, and the Nasdaq from December 5th all the way to December 6th. As of December 6th, 4 p.m. Eastern Standard Time, as you see the stocks crash for the second time of this new week. So that shows you a clear sign. You're still going to have inflation increasing, even though it's slowly decreasing. You're still going to have consumer spending increasing, warning signs of it in recession. That the Federal Reserve is going to continue to increase the inflation rates once they have a meeting starting next week. So we're going to see this trend continues of the markets crashing. So with that, I'd like to give all praises and glory and honor to Yahweh Bashem, Yahweh Shai, Bahashem, Karkadash. Double honors to the elders and apostles of Great Millstone, preaching His word truthfully and sincerely. And shalom to the Akim, scattered through 4 corners of the globe, preaching the word truthfully and sincerely. And shalom to the Akim, that be like unto the speckled bird, preaching the word truthfully and sincerely. So I hope this lesson was edifying of the article that I just brought out. And so with that, I will say shalom and a ball.